measurement of the elements of financial statements. Again, a very important concept to learn. You have seen that each financial information carries a monetary value. How to determine that monetary value is the measurement. So in financial accounting, we see that there are some bases upon which we measure the financial information, or we measure the elements of financial statements. We do remember there are 5 elements of financial statements: assets, liabilities, owner's equity, incomes, and expenses. So here we will be learning that how to determine the value of those elements of financial statements. So there are 4 measurement bases. Number 1, historical cost. Number 2, current cost. Number 3, realizable value or settlement value. And number 4, the present value. These are the 4 bases on which we emphasize while measuring the elements of financial statements. Either we would be using historical cost to measure the financial information, which are also known as the elements of financial statements, or the current cost, or the realizable value, or the present value. Although in our financial statements, what we see that mostly the financial information or the elements of financial statements are measured based on historical cost. For the sake of your ease to understand these 4 measurement bases, let's assume that you have purchased a motor car, and that buying happened 2 years ago. 2 years ago, you purchased a motor car for 1 million rupees. And that motor car is providing you economic benefits. You means to your entity. We have already discussed the entity concept and the separate entity concept for accounting. So that motor car that you have purchased for the entity is providing economic benefits to the entity. Therefore, and also you are expecting a probable future economic benefits as well associated to that motor car. Therefore, that motor car has already been recognized as an asset, which is subject to depreciation as well. And we are assuming that the useful life of that motor car is 10 years. If you divide 1 million upon 10 years, you will get 100,000 as depreciation. Depreciation is the part of the cost of asset that you assign as an expense associated to the economic benefits that your entity has obtained by using that motor car for the organization. Details will come up in the upcoming modules. But over here, that car has been depreciated equal to 100,000 each year. So after 2 years, its book value is 800,000. So this 800,000 is representing its historical cost. Today you can sell that car in the market supposedly for 600,000. This 600,000 is realizable value. And if you want to buy the same type of car of the same model and made by the same maker, that car you can buy for 700,000. This is the replacement cost. And if you are using this car for your business, for rental to others, you are getting future cash flows by renting this car to others. And the discounted future cash flow of this car is supposedly 500,000. This 500,000 would be its present value. I can understand that this present value concept is little confusing or disturbing for you at this point of time, but don't worry. It will become easy when we will discuss it in detail somewhere in the other chapters. So this is historical cost, realizable value. Historical cost today is 800,000. Its realizable value is 600,000. Its replacement cost is 700,000. And its present value is 500,000. So the important tips to remember in this module are that initial measurement is done at the time of recognition. When you are preparing the voucher, in fact, we will discuss this voucher concept in the later modules. While preparing voucher, you have to recognize the correct accounting head with the correct measurement basis. And the subsequent measurement is needful at the end of the reporting period and in certain cases at the time of derecognition. So measurement of the elements of financial statements is initially done at the time of recognition and subsequently while we are derecognizing that asset, or sometimes if it is needful, we have to remeasure that specific element of the financial statements. Thank you.